Welcome to Stock Market Reddit Daily, a YouTube channel dedicated to covering the latest discussion about the stock market within the social media platform Reddit. For today's video, we explore the retail sentiment regarding recent market volatility. Is it time to be concerned about the recent tech market dip? Does it signal that we're in an AI bubble, just waiting to pop?
Okay, let's dive right in. The mood on all the investing forums is, well, it's tense. And this one question, just the title of a post on Reddit, seems to capture what everyone is feeling right now.
This post from the subreddit r/stocks just hits the nail on the head, doesn't it? It perfectly captures the anxiety. And really, the entire online debate seems to split investors into two big camps. The people who think this is just business as usual, and those who are afraid it's the start of something much, much worse.
Now, to really get why everyone's so panicked, you have to see the disconnect between the big picture and what's actually happening in people's accounts. I mean, on the surface, things don't look that bad. As one user pointed out, the S&P 500 is only off by about 3% from its all-time high. In the grand scheme of things, that's kind of like a rounding error.
But here's where it all falls apart. This is why it feels so much worse. While the big market index is kind of holding steady, individual portfolios are getting hammered. People on Reddit are talking about their favorite tech and SaaS stocks being down 30, 40, even 50%. And it's not just tech. You've got crypto taking a nosedive, and even gold and silver have had these sudden, sharp crashes. That's where the real pain is. So, this brings us to the first major camp in this whole debate, what I like to call the Zen investor. You know who I'm talking about. These are the seasoned, long-term folks who've seen this movie before, and they've got a playbook for staying calm. Their entire philosophy can pretty much be summed up by this one classic quote that you see shared all over the threads. For them, the game isn't about timing the market perfectly. It's all about time in the market. Patience is the superpower. So the crucial thing for this group isn't about trying to avoid the dips. It's about how you act when they happen, and they follow a really simple four-step playbook. First, they just normalize it. They accept the dips are part of the game. Some users even say you should expect 7 to 12 of them a year. Second, they revisit their thesis, like why did I buy this stock in the first place? Has anything fundamentally changed? Third, they disconnect, step away from the charts. As one Redditor put it, staring at them only raises your stress, not your net worth. And finally, they reframe it. This isn't a crisis, it's a sale, a chance to buy more of what you love at a discount.
All right, now for the other side of the coin. For every Zen investor, you've got an alarmist. And this group is completely convinced that, you guessed it, this time it's different. They think the old playbooks are useless right now.
See, this camp isn't just seeing a normal dip. No way. They see a whole bunch of different factors coming together to make this moment uniquely dangerous. This comment really captures that gut feeling they have, that the data we're seeing just isn't telling the full story.
And it's not just one thing that has them worried. It's a whole collection of serious concerns. First up, the so-called AI bubble, with companies spending billions on tech that isn't actually making money yet. Second, weak economic data that might be hiding how bad the job market really is. Third, the sheer speed of this drop has people thinking it's not regular selling, it's forced selling from margin calls. And, to top it all off, you've got this backdrop of political instability and tariffs creating uncertainty all over the globe.
Let's just focus on that first point for a second, because the term AI bubble is absolutely everywhere. So what does it actually mean in this context? Well, according to Redditors, it's this fear that hundreds of billions of dollars have been poured into AI based on pure, uncut hype. Companies are making these huge, long-term bets on tech that isn't profitable yet, and if those profits never show up, the whole thing could just completely unravel, kind of like the dot-com bust back in the early 2000s.
So, you've got these two powerful, completely opposite arguments. What does a community of thousands of investors do when faced with all this uncertainty? Well, they cope with a heavy dose of gallows humor. When the charts are all red, sometimes all you can do is laugh, right? A super common theme you see is this idea of the personal jinx. You know, the feeling that your own good luck is what actually caused the market to tank. This user is jokingly apologizing for crashing the entire market just because they got a little too happy about their gains. And the self-deprecating humor just keeps coming. Here you have users taking the fall for everyone's losses after making one tiny little trade. It's just a funny, relatable way of saying, hey, we're all in this mess together.
And of course, there's this one, the simple, incredibly relatable fear of even looking at your own accounts. This user just perfectly captures that feeling of wanting to hide under a rock until the storm passes. I mean, come on, who hasn't felt that?
But you know, beyond all the jokes and memes,
This whole debate really shines a light on a deeper truth about investing. And it has nothing to do with charts or AI or economic data. It's about psychology. It's about the battle that happens inside your own head.
One user broke it down beautifully. They laid out the fundamental difference between the people who make it through the volatility and those who don't. You've got the impatient investor, always chasing those crazy 50 to 100% gains in risky stocks. They get swept up in the hype, and they're the first ones to panic sell when things turn south. But then you've got the patient investor. They're in it for the long haul, choosing steady growth and just tuning out all the short-term noise.
And this all boils down to this timeless piece of advice from the investing pioneer Benjamin Graham, which one Redditor shared to put everything into perspective. It basically says that the market isn't the real problem. Our own emotional reactions are.
So ultimately, what these Reddit threads show us is that the biggest battle isn't really between the bulls and the bears. It's the battle between an investor's own fear and their discipline. It's not about predicting the future, it's about controlling yourself in the present. And that leaves us with one final, provocative thought to take away from all this. In a market that is just filled with noise, from the Zen masters to the alarmists to the comedians, the hardest part is figuring out which voice you should actually listen to, including the one inside your own head.